Hi, sir. Welcome to our podcast channel of Karigar. How are you and how is the mortgage market?
Hi, thanks for having me again. I'm doing really well. And the mortgage market, well, it's got its ups and downs like a lot of things going on in the economy these days, for sure.
Okay. So today I told you that we will discuss a bit of like a rental mortgage. Okay. So
hmm
we know that if someone wants to grow their net worth, real estate investment is one of the best way to go to get there. So if a guy like me wants to grow his net worth, planning to buy some rental units, how he or she should proceed for getting a mortgage? What would be the first step?
Well, the first step towards purchasing a rental property is you have to make sure and be aware that you require down payment in any case. When
Okay.
you're buying an investment property, you're needing at least 20% down. So if you want to buy a condo and you want to rent it out, we're looking at 20% down. Um, that's the first thing is you have to consider that when you're going down this route, right?
Yeah. So, for example, if somebody has a house and he or she is planning to go up further and wants to buy like a condo or a townhouse for some rental unit, then can he or she use the home equity in getting those rental unit, or for the rental unit they have to plan for the down payment in a different way?
For sure. So equity and being able to pull that equity out and using it towards a down payment, that's something that we actually teach you how to do. It's
Hmm.
something that we do. We do all things mortgages, but that's something that we do really well. If you, in your example here, if you own a property, let's say
Yeah.
you've owned it for the last 4 or 5 years and the value of that property has gone up, you have some equity sitting in there. Now, if the equity is sitting in there, it's not doing anything. We refer to that as dead equity. Um, so the simple answer would be is you'd look at seeing how much equity you have available and you could take that money out and pull it out and you could use it to put towards another down payment or put towards another investment. So the rule of thumb is you have the value of your property, you can take out as
Hmm.
much as 80% of it.
Okay.
So let's say you have $1 million home
Yeah.
and you're able to take out 80% of it, so 800,000. But if you owe 600,000 on it,
Hmm.
then you have to subtract what you owe. So in this scenario, you'd have $200,000 that you'd be able to take out because you already owe 600, but you're allowed to take out eight, right? So in that scenario,
Yeah.
you'd have $200,000 that you could use towards the down payment on another property, for instance, right?
Yeah. Okay. Okay, that's good. So, uh, for Gen Z and millennials, okay, if they are thinking of buying a small rental unit and they don't have enough down payment, is there any way or any solution for them?
So I think that regardless of what generation you're from,
Hmm.
there needs to be the you have to start somewhere. So many
Yeah.
people refer to this as house hacking. Um, you want to buy a place. When you buy a place and you meet the
Hmm.
requirements, you can purchase a place for as little as 5% down. You can live in that place for a year or two, maybe
Hmm.
3 years. You can do some renovations to it. You can figure out ways that you can maybe increase the value. And then
Okay.
after staying there for a while, the equity is growing, you're paying your mortgage down. Maybe, like I said, you're doing some renovations to it, you can increase the value. At that point, you can do the exact same thing that we just mentioned. You can refinance it, and perhaps there's enough money there to take out and put towards another property. Now, maybe you don't have 20% available.
Hmm.
What you can do is you can now rent the place that you're currently living in. You can rent that place out and you can
Yeah.
buy another property that you're going to be living in. And as long as it meets those criteria, you don't need to put 20% down if you do that. You can convert your current place into a rental and you can move into the new place and you can put less than 20% down if you qualify. Right. So that's what a lot of people do. They get on that first step of that ladder
Hmm.
and then they work their way up. Now, once you own one property, it's a lot easier for you to get into the second property, and so on and so forth, right? So my advice would be, that's the best way to start. Now, if you have zero, if you have started with nothing,
Mm-hmm.
and you're looking to start getting a down payment, what I would recommend that you do is you sit down with someone like myself, or you do some
Mm-hmm.
budgeting, and you look at, okay, let's say that you're in your market, a house that's going to be a starter place is going to be 500,000. You need $25,000 to put down. What are the costs associated with this property? You start to like
Yep.
accumulate, and you start to live as if you already own that property. So let's say, for example,
Mm-hmm.
all in, it's going to cost you $3,500 a month to live in this property. Taxes, heat, payments,
Mm-hmm.
etc. You then basically act as if you're living in this property. If you're living at home and you're not making any payments to rent or anything, every month you take $3,500 and you set it aside as if you're putting it towards this property.
Yep.
Now, if you're able to do that, before you know it, you're going to have enough money to put down and closing costs to buy your first place. That would be my advice, is to look at where you need to go and start working backwards.
That's a pretty very good idea. But I have a confusion. My confusion is like for the first time home buyers. Okay. So there is like FTHI scheme something. So if somebody goes under that government scheme of FTHI with low down payment, okay, will they be able to use that property later on, or that is not be applicable to use their equity later on?
So absolutely. So if you're using some sort of incentive with the government where they're going to be a partner with you, I think
Hmm.
that's what you're referring to.
Yeah.
In Canada, anytime you put less than 20% down, you have to obtain mortgage insurance. Now that mortgage insurance gets tacked onto your mortgage. So for example, if you put 5% down,
Hmm.
4% of it goes towards the insurance premium. The insurance premium gets added to your mortgage, and then you pay it off. If you're getting into bed with the government and you're using some sort of incentive program, like Ontario has one,
Hmm.
there's a national one as well, which not many people took advantage of it. I believe in British Columbia we had one as well for
Yeah.
the province, but they've gotten rid of it. Um, you essentially become a partner with the government. They're minimizing their levels of the loss. So, like if
Hmm.
your property goes down in value and you're looking to sell, they will share into your losses by up to 8%. But if
Okay.
there's more than 8% loss, they'll only cover 8%. You have to cover the rest. And then if the property value has gone up, you have to share that and split that with them, right?
Yeah.
So will you be able to refinance? My
Hmm.
understanding is you have to pay your loan off first before you can refinance
Got it.
in that situation.
Got it. Got it. So for somebody who's looking for the rental properties, in getting mortgage, so what would be the finance institution? Those are like more of chances of getting from those, like approval from those institutions. So is there any particular section of institution, like for example, RBC? Is like if somebody looking for rental, would they look for this kind of institution, or there is like unanimous, everybody goes with
So
the same?
that's a good question. It's a really difficult question to answer generally because there's so many variables that
Mhm.
come into play. Generally speaking, though, now if there's a specific situation, we're happy to connect and guide you a bit more with specifics. But
Mhm.
right now, just we're going to be very general.
Yeah.
Generally speaking, there are certain lenders that use more rental income. Um, if the property is not your subject property. Across
Mhm.
the board, the government has made it so that institutions have to use for the subject property, they're usually taking 50% of the income and adding it of the rental income and
Yeah.
adding it back to your income. It's fairly straightforward. So there's no advantage from one institution to the next unless you're looking at alternative financing.
Okay.
Certain lenders, though, they have guidelines. They require you to have a minimum amount of money set aside for fallback. That's what they call it. So let's say you have 20% down. They may want to see another 5% or 10% that you have available in
Mhm.
case there's any interruption in rental income, if there's some vacancies, if the property needs some repairs or anything like that.
Yeah.
Those are things that they look at, right?
Yep.
So there's generally speaking, most of the institutions, you're not like, there's, I'm going to backtrack a second here.
Mm-hmm.
If you're looking to purchase a property that you're just renting out and you don't have a primary residence, there
Mm-hmm.
was a time where lenders didn't like this,
Yeah.
and they would, all lenders will charge what's called a shelter cost. So even if you're living at home with mom and dad,
Mm-hmm.
most lenders will charge a minimum of $600, maybe in some cases $500, but usually it's around $600 per month. They take that into account as your shelter payments
Okay.
to qualify you for a mortgage. Even if you're not paying any rent or anything like that and you can prove
Mm-hmm.
it, they usually take that. So
Okay.
um, they've, now these types of policies and guidelines, they change all the time. 8 months ago,
Mm-hmm.
they used to really not like if you didn't own a property. Now they have a softening stance on that, but they're
Mm-hmm.
using these shelter costs and things like that, right? So that's
Yeah.
why when I say that it's difficult to provide some generalities, it's because it's very fluid, right? And it's
Yeah.
changing consistently. That's the one constant, is change.
Got it. Okay. So my next question would be, is there any difference in getting financing for short-term or long-term rental? Like, for example, I'll give you, like, I have got two properties, and those are for Airbnb, and I've got another property that have like a lease agreement for a long term. So is there any difference in buying the property that has already like a long term or short term rental, or there's like both of them, the institution sees it unanimously?
So again, a good question. Generally speaking, again, now these are case by case once again,
Hmm.
but most institutions don't like to see short-term rentals.
Okay.
The reason behind that is short-term rentals in their eyes can be a bit more risky because you don't know who the tenants are. They can
Hmm.
come in, they may be partying, and they may damage the property, right? So
Yep.
many institutions, if they know that you're going to use something for short-term rentals, or if you're relying on the short-term rental and you can't rely on regular income, because there's certain properties you could be
Hmm.
getting $5,000 a month
Yeah.
from, if it's in a nice area, maybe even $10,000 a month from short-term rentals, but the long-term rental might only be 2 or 3 grand a month. So
Yeah. Yeah.
lenders
True.
err on the side of being very conservative, so they want to take the lower of the two numbers. If you need
Okay.
your short-term rental income, they're likely not going to want to qualify you. That said, there are niche lenders that
Hmm.
specifically lend on short-term type properties. Those lenders are in the B space or the private space.
Okay. Got it.
There are specific lenders now. Um, I know we're talking specifically about short-term, but there's also rooming houses and boarding houses.
Hmm.
RBC, for example,
Yeah.
they have a softer stance and they will do these types of properties. So if you have a boarding house or a rooming house, they
Hmm.
will they will do it.
Okay. Okay. It's good to know. And my last question for you for today is, what's the best way to get financing for a multi-unit rental?
So again, a very good question, Raj. The multifamily unit
Yeah.
type of property, it's very interesting. You may not qualify for a regular property,
Hmm.
but you may qualify for a multifamily. And if you're planning on living in one of the properties, you can actually put less than 20% down as long
Wow.
as everything qualifies, and you can actually get um, insured financing. And you can use the rental income from the other properties.
Hmm.
And there's some specific programs, like if you have 5 doors
Yeah.
um, in this unit, like if you have like a multifamily dwelling where you're living in one of them and you have 4 other rental properties, there's a specific program, and you can actually take most of the rental income to help you qualify. So we've actually had a couple scenarios where clients looking to buy a duplex,
Hmm.
unable to qualify for the duplex, but they looked at another property, bigger property, a couple of more units, and it was multifamily, so they had like 4+ units in there, and they were able to actually qualify, and they were actually able to put less down.
Oh,
So
wow.
there are some specific products available through our insurers that allow you to make the multi-family a lot more accessible.
That's good to know because I'm planning to get like a multi-unit rental property. So this
Mhm.
is very helpful for me, this advice.
The key though is you have to make sure that you have plans and you're going to be living in one of those units because it's then considered owner occupied plus rental, right?
So that means like if the person doesn't stay, if one of the unit remains vacant, no rental is coming from there. That means that the person is staying over there.
Well, yes, if you have a property there and there's one vacant unit that you're going to be residing in,
Yeah.
then you're able to, whatever I just said will apply to you. Um,
Okay.
you the key though is, and remember, a mortgage is a snapshot and a point in time. It doesn't
Mhm.
mean that you have to live there for the rest of your life.
Yeah, yeah.
As long as your intention is to live there and you're planning to live there for the foreseeable future, the future can change. Maybe you get married and maybe your wife has a nice big house that you want to move into, so you can rent this out and move in with your wife or something like that, right? Life
Yep.
can change. We're just talking about the intent and what you're doing presently, right?
Yeah. Okay. Perfect. Good to know. So yeah, that's all from me for today. And
Yep.
I would ask you if you have like if you can share your contact so that our viewers and our Karigar users they can also contact you regarding any kind of advice or any kind of rental or residential or the first time home buyer. They can contact you directly from our Karigar too.
Absolutely, Raj. I appreciate it. You can find me on Instagram. My handle is at the mortgage specialist. My website is www.themortgagespecialist.com. Email Aleem at themortgagespecialist.com. And my phone number is 778-233-2377. We offer free, no obligation, no strings attached second opinions. And one of the things that we're doing a lot of right now is we're doing audits, financial audits, cash flow. We look at your financial situation, and if there's a way that we can help you find ways to clear cash. There's about 14 different strategies that we use. Only 2 are related to mortgages. The other stuff is just simple budgeting. That's something that we're doing a lot of, and it's complimentary. 15-20 minutes, and we can try and save, our goal is to at least try and save $250 off of your bottom line. So that's something that you want to take advantage of. Thanks again for having me, Raj. And I'm happy to come on anytime you have some questions or anything. It's been a pleasure, and I really appreciate it. Thank you.
Yeah, yeah. We are happy to have you on our podcast channel. And also, I will try to pull out your link and I will put it with this with the when I'm going to upload it to our channel so that people get easy to contact you through the website link. Okay.
Awesome. Thanks so much.
Okay. Have a nice one. Bye for
All
now.
right. Thank you.